Hello guys, how's it going? It's Daniel FX. Today we're going to be talking about other blocks, other block, OB. There are different names people call it. Some call it institutional areas. Yeah. So what are other blocks and why, as a trader, do you need to be concerned about it? Yeah. This is one thing after fair value gap that after discovering it, it helped my trading. Like it boosted it. It helped me a lot through my trading career when I was still learning. So why as a trader do you need to be concerned about other block? So like I said, other block are institutional areas in the markets, and these are areas or price levels where price got filled. Like it's an area where price stopped and feels like, yes, this is an area where I need to start reversing, or this is an area where I need to start selling from. Yeah. So maybe the price tapped into a previous order block and stopped at this area, start selling. But the general definition for an order block like is an institutional area. This is an area where price got filled. Just like fair value gaps is an area whereby since price got filled here, they might push price to that area again. Price might retrace back into those areas, fill orders, and continue its intended direction. So they want to buy at a cheaper price, they might push price to that level and sell again or buy again. So when you look at this chart very well, look at it very well. I want to tell you something before we start. I start explaining more about these different types of other blocks, where we have the bullish other block and the bearish other block, and we also have high probability other block and low probability other blocks. And we also have what we call breaker blocks, but I won't be touching on that on this particular video. So when you look at this video, for you to like know a very confirmed or correct other block, you have to look at this chart that I've just marked. I marked a break of structure, which is called BOS. So you want to mark out, or if you want to know if your other block is valid, that other block must cause what they call a break of structure. Yes. So when you look at this movement, you look at the first one where we have the bullish movement to the upside. You can notice that that level was the level where price stopped and started buying, which caused a break of structure to the upside. One, that's the number one confluence you need to get. That area caused, or that demand caused, a break of structure. So you can see how price traded up to the upside, then retracing back, it fell into that other block once more. But before doing so, the price went up again, then fell again, which caused a break of structure to the downside. Then price ran into that bearish order block, just like you can see, as I marked it. It tapped into that bearish order block and went back into that bullish order block, and price started buying again. So if you examine this chart on your own, examine it on your own and see what, or for your own self, you can define this other block by yourself. You can see that it is an institutional level. So if you want to get a valid order block, these other blocks must cause, the movement must cause a break of structure for you to be like certain that this other block marked out I want to use is valid. So these are institutional levels where price got filled. Just like I said, it is an area whereby you can mark out and wait for price to retrace back into that level to continue its intended direction. So, like I said, we have the breaker blocks, we have the other blocks, we have the bearish other block, we have the bullish other block, we have a high probability other block, and we have low probability other block. This example I just give you here is just a high probability other block, showing you the other block has a very bullish momentum. That price level has very high bullish momentum. So one thing I always advise my students to do is go back to your chart. Yes, go back to your chart and try as much as possible if you can spot these other blocks, if you can spot these demand zones. Yes. So, like I said, if you have any questions you want to ask me, you can send me a message. I'm going to be very, very happy to answer you. But have it in mind that for you to know if your other block that you're marking is very correct or if it's valid, that movement caused by the other block must cause a break of structure to the upside or to the downside. So if it doesn't cause a break of structure to the upside or downside, have it in mind that that other block is not valid, just like you can see on my screen. So you try as much as possible to use this example on my screen to you make use of it. So if you are marking this other block, there's a way they do mark it. You're going to be marking from the tip of the other block. If it's a bearish, if it's a bullish one, just like you can see, you're going to be marking from the tip of the other block to the last bottom of it. Same for a bearish one. So this way, when price comes into that level, you're going to be waiting for rejections. You're going to be waiting for it. Market is going to be rejecting it. When you look at the one in the middle, when the price retraced back into that bullish order block the first time, you can see it rejected it three times. It rejected it three solid times. This is a 15 minutes time frame. You can see that price trap into it for three good times in a 15 minutes time frame, and price rejected it. So the third time the second time it came into that level, it rejected it as well. So what you'll be waiting for you to get a valid confirmation for your other block is rejections. So if you don't get rejections in your other block, then have it in mind that is a possibility that your other block might turn into a breaker block, hereby a situation whereby a previous other block turns a breaker block. When it turns a breaker block, I have to be going into a breaker block right now, but I have to do so. So when your other block turns into a breaker block and maybe price passes that area with full body candlestick without rejecting it, the price might retrace back into that other block. So therefore it has turned a breaker block, whereby the situation whereby a previous other block turned breaker block because price passed that level, the price rejected that level. Instead of price to come into that level and maybe feel that area and reject it, no, it passed it with full body candlestick. So when price is returning back into it, it's going to be rejecting it. So that's just it. So if you need more clarifications for my students, if you need more clarifications for these other blogs, send me a message. So thanks you very much for watching this video. If you really enjoyed this video and you want to be getting more content like this, please subscribe to my video on my YouTube channel. Thank you.